Best pick KOSPI market close for June 17. All right, today we're unpacking some truly historic milestones for the KOSPI, along with those massive global macro shifts that are literally reshaping the investment landscape as we speak. Let's get right into it.
So, despite some pretty real early morning jitters, the KOSPI completely defied expectations today to lock in an all-time closing high of 8,864.24. And the main engine behind this? Absolutely SK Hynix. They shattered that 2.5 million won ceiling for the very first time, closing right at 2,521,000 won. It's a massive deal. But to really understand how we got here today, we got to break down the mechanics under the hood.
Here is what we're covering in today's explainer. First up, major market index performance. Number 2, investor flows and capital. Third, sector and stock highlights. Fourth, technical indicators and sentiment. And finally, global macro and central banks.
All right, Section 1, Major Market Index Performance.
Looking at the numbers, there's a super clear divergence today. Overnight, the U.S. markets, specifically the NASDAQ and the S&P 500, got hit with some heavy tech profit-taking. I mean, the Philadelphia Semiconductor Index dropped a steep 5.7%. But here's the crazy part. The domestic markets just shrugged it off. They absorbed the shock completely. Instead of mirroring that U.S. tech slide, the KOSPI surged 1.58%, and the KOSDAQ climbed 1.30%. This kind of domestic muscle is seriously renewing momentum to push the KOSPI straight toward that 9,000-point mark.
Moving on to Section 2, Investor Flows and Capital.
So where is the money actually moving? Well, foreign investors snapped a 3-day buying streak today. They went for some preemptive profit-taking ahead of the FOMC, offloading about 993.1 billion won. Normally, that's a heavy hit. But we saw this incredibly aggressive, coordinated buying step in. Institutions grabbed 577.7 billion won, and retail investors threw in another 543.1 billion. That joint effort completely ate up the foreign sell-off, acting as a massive support pillar for the index today.
Section 3. Sector and stock highlights.
Diving into the micro level, institutional capital absolutely flooded into the AI memory theme today. That's exactly what drove SK Hynix up 5.84%, totally cementing its spot as the KOSPI's second largest company by market cap. Samsung Electronics wasn't left out either. It got some concentrated buying, bumping up 1.02% to close at 346,500 won. And over on the KOSDAQ, Bio and Robotics basically acted as co-captains. They caught massive institutional inflows, which is what dragged that index back above the 1,030 line.
But, of course, it wasn't all green. Capital definitely rotated out of a few traditional sectors. We're still seeing lingering worries about a broader demand slowdown in legacy autos, which dragged Hyundai Motor down 2.80%. At the same time, Samsung Electromechanics took a really harsh 9.58% hit. That plunge was mostly driven by all this swirling uncertainty around global electronic components and MLCC demand right now.
Now this is fascinating. We are tracking a very clear shift in how retail capital is being allocated. The domestic IPO market is still incredibly sluggish. Out of 15 newly listed companies this year, 11 are already trading below their IPO prices. So with this lack of juicy domestic options, retail investors, our local SeoHawk ants, are looking elsewhere. They executed this massive capital flight, literally pouring 1.2 trillion won into US-listed SpaceX in a single day. And the catalyst? SpaceX just acquired the AI coding agent Cursor, a strategic move that helped pump the US firm's market cap to a staggering $2.658 trillion. Talk about a pivot.
You know, navigating these rapid capital shifts really requires precise, objective data. If you rely on clear, data-driven explainers like this one to track all these complex global dynamics without the extra noise, please make sure to hit that subscribe button and like this explainer. It's the best way to ensure you never miss an update.
All right, let's look at Section 4, Technical Indicators and Sentiment. From a purely technical perspective, the market is flashing some mixed signals. On one hand, SK Hynix locked in a beautiful golden cross today by successfully filling its early intraday gap. Awesome, right? But on the flip side, the KOSPI's 25-day disparity ratio is officially signaling disparity overheating. Basically, asset prices have stretched way too far above their moving averages. Toss in the heavy concentration of retail sentiment parked in SK Hynix leveraged ETFs, and we've got a setup with high potential for sudden, sharp profit-taking in the short term. So tread carefully there.
Finally, Section 5, Global Macro and Central Banks.
Let's zoom out to the macro level. First up, a massive geopolitical development, the formalization of the US-Iran peace agreement.
This has drastically, and I mean drastically, cooled the geopolitical premium in the energy market. As a direct result, WTI crude just plummeted over 5%, breaking right back below that $80 a barrel threshold for the first time in 3 months. For the broader market, this is a hugely positive inflation relief signal.
But building into the central bank narrative, the broader monetary policy environment is shifting incredibly fast. We're actually witnessing a clear return to global monetary tightening. Just look at the timeline. The European Central Bank just rolled out its first hike in 33 months. Then, on June 16th, the Bank of Japan lifted its interest rate from 0.75% to a flat 1.0%. That puts them in the 1% range for the very first time in 31 years. And all of this tightening is happening exactly as the market holds its breath for the FOMC meeting. Everyone is laser-focused on newly appointed Fed Chair Kevin Warsh's inaugural press conference, looking for any clues or shifts in that 2026 dot plot.
So what does this all mean? Well, it brings us to the ultimate question for domestic markets moving forward. With these global tightening cycles shifting so aggressively, and South Korea's domestic consumer inflation stubbornly glued at 3.1%, the pressure is really actively mounting on the Bank of Korea. Exactly how they respond to this rate hike pressure is, without a doubt, going to be the next critical factor for the South Korean market to digest over the coming weeks. Keep an eye on that. Thank you for watching.